All right. Good mid-morning to everyone. And I have to say, whenever I see a full house, I get energized. So this is one of those events where I get really, really excited, and I want to be the only speaker, but unfortunately I can't be. So I'm happy to be here. This is probably my 5th time in the last 7 years. I think I missed only the COVID suspensions. It's actually remarkable that the organizers, especially Dr. Gamachu, has been able to sustain this thing for such a long time. I remember the first time I came as a small group. I think he said it was a couple hundred people, may have even been less than that. And some of the topics at that time we were talking about, they seemed esoteric. There's like these guys, what are they talking about? There are many other priorities in Ethiopia, and they're talking about financial service sector reforms, they're talking about capital markets, all the things that have now become a reality. So I think the message is, the lesson is, it's good to be persistent, it's good to stay on message, and I think ultimately you have an audience, and lucky for them and us, I think currently the reforms that you see are really, really dynamic, and I think we are all part of that process here. So my role is as a moderator. I'm not here to give a speech or make lengthy remarks, but I couldn't help pick up on a few of the key points that the Governor Mamo, mentioned this morning, and I think I align with everything he said. But I want to link it to where we are as an economy, where we are as a country, where our economy is going, where it's been. I mean, I think some of you may have seen my tweets or my previous interviews. I've always been very, very bullish about the Ethiopian economy, even when there are challenges. So a couple months ago, I saw statistics which reminded me how far we've come as an economy. So 20 years ago, we had a tiny little $10 billion GDP. 20 years ago. I mean, you can look it up. It's the IMF's number. And this year, and I think a couple weeks ago, there was a new data that came. Our Ethiopia's GDP has actually exceeded 200 billion. I have our fellow Kenyans in here. We used to always say we want to be like the Kenyans. We want to be competing with the Kenyan GDP. With all due respect to our Kenyan brothers, and now we have the bragging right to be a bit bigger than yours. Now, I know everything is relative, but at least we now have a $200 billion GDP. Yes, there's 127 million of us. We're very busy people replicating, by the way. We need to slow down a little bit, but that brings down our per capita GDP compared to Kenya, but still, we're a sizable economy. So the stuff we talk about today, whether it's capital markets, I'm on the board of the stock exchange, ESX. We're a very, very dynamic organization. We meet very regularly. We're all energized. As was said by Governor Mamo, before the end of this year, probably by November, ESX will start trading. 7, 8, 9 years ago, this was like people thought we were completely mad, right? But a lot of you in this room, especially those in the financial service sector, you benefit tremendously from Ethiopia launching a stock exchange. Again, that's a reflection of where we are as an economy. $200 billion GDP. Ethiopia was the only economy of this size that did not have a capital market. Okay? Today we do. Well, at least by the end of this year, before the end of this year, we'll actively start trading. That's, again, a reflection. The financial service sector, I mean, there's a lot of bankers in this room, so I want to be careful what I say here, but I think the oldest private bank in Ethiopia is 28 years old. I don't know which one it is, 28, 29 years old. So these are very young banks that started not too long ago and have grown tremendously. And I think that's a credit to them. We haven't had a single bank failure in Ethiopia. That's a significant achievement by itself. But now we're transitioning to a very sizable economy. So the landscape, the regulatory landscape, the reform the governor talked about, it's very timely. Now, I have an agenda, of course, when it comes to the banking sector. You've probably seen me talk about it repeatedly over the years, and I did it again a couple weeks ago. I think there's just too many commercial banks in Ethiopia, too small. I'm on the record saying we need consolidation. Why do we need 30-plus banks? Okay? Shouldn't we just have 5 or 6 very sizable banks? That's my view. We've been saying this. If you look at the tapes, YouTube, I've been saying this, but I think what got me triggered on that point is a couple weeks ago, Nigeria, where we do business, we're making investments in Nigeria. The Nigeria Central Bank mandated a capital increase. At the moment, there are 25 banks. There used to be 84 banks in Nigeria. They went through a similar process where they continued to increase the capital requirements, in some cases mandating mergers. Now they're down to 25, and the assumption is they'll be down to about 8. Okay? So if you look at Nigeria as the largest economy in Africa, and South Africa and Ethiopia, these are the 3 largest economies in sub-Saharan Africa. And in South Africa, they only have 4 banks. In Nigeria, they might end up with 8. Do we really need 30 banks when we're trying to be a bigger economy than it is? So that's, again, these are the kinds of topics we've been talking about in this kind of venue for many, many years. But I think we're getting there. We're going. The entry of the foreign bank. So I want to pick up on a few points, as I said, what Governor Mamo said, because I also align with everything he said. I mean, he talked about the global trends, how the impact of the Federal Reserve's increase of interest. They continue. The Americans, they have the reserve currency of the world, so they only worry about themselves. And I say that as an American, so I won't be denied visa entering the United States. But they're very selfish sometimes. They increase interest rates to accommodate their economic needs. But it has global impacts, as the governor said. Okay, borrowing costs have gone up, especially for emerging markets, for countries like Ethiopia. Again, we need to factor in when we discuss in this forum. He talked about the lingering effects of COVID, which has increased the expenditures of governments, including the Ethiopian government. Again, that's an important factor to consider when we discuss financial service sector reforms. But he also talked about some really exciting things. I was fortunate enough to attend the Digital Ethiopia event about a month ago where the Prime Minister was speaking, and I saw a number that fascinated me. In the first 6 months of this year, it's almost 4.5 trillion, almost 5 trillion birr worth of digital transactions were conducted. 5 trillion birr. I was going to say dollars. One day we'll get to the dollar version. But this is unbelievable. We came from nowhere 3-4 years ago to transacting in the trillions. Again, it's a reflection of where we're going as an economy. Now, when the governor talked about the reforms that the NBE is implementing, one of the most amazing documents I've seen published in Ethiopia in the economic sector was the Financial Stability Report that was issued by the NBE. I think those in the financial sector have seen it. It was really remarkable. First of all, that's frankness, because we didn't really used to see these kinds of openness from the central bank. So for investors like us, for people like us who do business here, even across the border, I think those kinds of openness, which is part of the NBE's reforms, helps us. For example, there's a target set for inflation, right? In the past, we was like, okay, what is inflation going to be like? It's guesswork for people like me to explain to ourselves, to our team, to our investors, co-investors. Now there's a target. Now, we achieve it or not, we'll see. But at least there's a target. It's linked to many other policy reforms. So the fact that the central bank, which has an impact on the economy, is reforming, and we're discussing it, and we had the honor of Governor Mamo being the speaker this morning, is relevant to where we're going as an economy. And then to wrap up what he said, and I think which is very important, is what next? I think he said the government, the central bank wants to see a competitive financial service sector. I couldn't have said it better. We need that. Again, if we're going to open it up to foreign banks, whether we open it up, let me backtrack, whether we open it up to foreign banks or not, which is going to happen anyways, even if it's just domestic banks, do we really have a competitive banking sector today? I think there's debates about that, okay? Are they providing sophisticated products and services to the marketplace? Again, remember, we are now not only the 3rd largest in sub-Saharan Africa, actually the new data says we're the 5th largest economy in Africa, period, in Africa. So that means the financial sector, the banking sector has to reform. So I'm a big champion of foreign banks coming in. We're actually working with a couple of them who are interested in buying shares, investing, or some of them are actually setting up their own shop. Again, this is what I think the governor was implying, is there'll be an open, diverse, competitive banking sector in Ethiopia. Okay? He talked about, obviously, the capital markets, but an interesting thing he mentioned was the BRICS Plus. As you know, Ethiopia joined the BRICS last summer, I think is August. A big plus for Ethiopia. So when we look at what I call the gradual shift of economic power from west to east, BRICS represent one of the key pillars of that. For Ethiopia to be a member is a huge plus. Now, there's a lot of work we need to do, but a big plus. So when we factor in all this, I think the reforms that we're talking about are very timely. So that will give me a segue to my to the next topic, which is I have a very, very distinguished speaker who I'm going to invite to come up to the podium. He's someone I've known for a number of years, very smart, very articulate, very funny, takes a lot of good jokes. And today, actually, he came, dressed elegantly like an emperor. Okay, I mean, and he rightly deserves so if he had been in a different time frame. But you know who I'm talking about. The first presenter for this session will be someone who actually doesn't need an introduction, right? But just for formality, I'll invite Zafu Eyesuswork Zafu to come up to the podium and share with us his usual wisdom and added a few things. So please, Zafu Eyesuswork, can we give him a round of applause?
I can't tell you how happy I am to see this East Africa Financial Forum grow to be where it is today. I do remember the first few summits where we thought 200 attendees were large. But look at it today, a big hall full of professionals from many parts of our continent. It is indeed a pleasure for me to be able to address you very briefly this morning. Usually I am not very brief, but it will not be my usual self, as perhaps those who have known me for long know that I have always been combative, argumentative, and so on and so forth. I have been introduced as a very sweet, thank you very, very much, Ato Zemedine, and you've been very kind to me. The subject I am going to address this morning is not as controversial as it used to be 30 years ago. 30 years ago, actually 1984, I believe, was the time when the insurance industry was once again opened to Ethiopians, physical Ethiopians and juridical persons, to establish insurance companies, because prior to that, January 1, 1975, all financial sectors were nationalized. Maybe the more appropriate word would be confiscated. And it was only in 1984 that the field was opened for Ethiopians to establish insurance companies. Now, I may sound a little nostalgic sometimes, but let me start by perhaps defining the product, the service product that we are talking about, the supervision of Ethiopia's insurance sector. Insurance sounds esoteric. I mean, not many people really know beyond the motor vehicle insurance policies they buy. They don't understand, and consequently, it's very difficult for them to appreciate that insurance is much, much more than a motor policy. It is a great enabler. I mean, we talk about GERD, our celebrated dam. You know how much that project costs? You think the main contractor, Salini, would have agreed to build that dam with all the exposures that his business and his people will have when constructing that dam. The potential liabilities that that contractor could face, it's in billions. And risks like that, if they are not shared, if they are not transferred internationally and spread all over the world, which is one of the businesses of insurance and reinsurance, you think Salini would have undertaken that kind of project without the support of insurance? Think of all the valuable things that we import into this country. And the marine perils to which those goods are exposed to. You think anybody would have invested that kind of funds if it were not for the marine insurance cover? That is offered by insurance companies. So, the origin of insurance is firmly founded on man's recognition, our recognition, that both ourselves and our belongings are constantly exposed to the dangers of loss and or damage. And two, or B, that insurance remains one of the modern and enduring mechanisms by which the probable, sudden, accidental, and fortuitous loss or damage on insurable interest, which could ruin one, is shared amongst many, such that the loss lighteth rather easily upon many than heavily upon few. The need to transfer risks, the need to share risks globally. I mean, that is what insurance is about. I mean, part of it. What about the immense investable long-term funds that the insurance sector mobilizes? Life assurance. Now, because of its direct bearing on how the insurance industry began or developed in our country, I am compelled to repeat just one point that we all know already, and that is how insurance, in its present form, was introduced to Ethiopia. Because this will explain why, partly, the insurance industry has failed our dreams, has not developed as much as it should have. Now, I have looked at many sources, and also studies about many other African countries, which confirm beyond dispute that insurance in its modern form was introduced to Ethiopia in 1905 through the Bank of Abyssinia, which at that time was controlled by the Bank of Egypt, and also to the continent. It was introduced mainly by foreigners. I mean, and this is a more euphemistic term for colonialists, because insurance came to Africa, including Ethiopia, to serve the interests of foreigners coming to Ethiopia. The present state of insurance, as we recall recent pronouncements of government to open up the financial sector to foreign competitors, first banking, followed by insurance, and ultimately perhaps the entire financial sector, there are some 18 private insurance companies in the market. According to the recent decision by the National Bank of Ethiopia to raise the minimum paid-up capital for a composite insurance office by sixfold come 30th June 2027, only 7 of the existing companies presently have capital that meets the new threshold of BIR 500 million. Market data of the last 5 years, as annexed to my presentation, shows some growth, but the industry has remained unexciting in many ways. With market penetration, the ratio of total premium income to gross domestic product at less than 0.5%. And providing products and services almost exclusively in this country to the top 1% of the population only. This demonstrably failing to cater to the bottom of the pyramid by way of, say, agricultural insurance. The insurance industry in this country has effectively failed to involve itself seriously in micro insurance. It's not the case in neighboring markets like Kenya or Uganda. So let me just quote that Ato Ermias Amelga, who in a yet-to-be-published study titled Tipping Point, he declared the absence of a modern, competitive, and innovative insurance industry in Ethiopia is a major structural void in the country's financial structure, and boldly suggested that Ethiopia should indeed allow foreign insurance companies to operate in Ethiopia. A more sympathetic observer would perhaps rationalize and say that conditions of the Ethiopian insurance industry are not so radically different from those prevailing in many other markets in the continent. When one looks back to the introduction of modern insurance to Ethiopia, and indeed the continent of Africa in general, it would not be difficult to understand why insurance companies in Ethiopia and many parts of Africa have failed their markets. Modern insurance came to the continent following the footsteps of colonialism, thus catering for the interests of the expatriates and their trade. Is it any wonder then that for the most part, neither the form of the service or product, nor the manner of its delivery considered the interest of the indigene and his needs? Is it any wonder? Thus, the indigenous insurance companies that emerged in most African countries, including Ethiopia, following the exit, voluntary or otherwise, of the foreign companies and or their agencies, simply carried on with what they found or they inherited. At the risk of sounding nostalgic and old-fashioned, I want to tell you that our industry's contribution, limited though they were and are to society in general and the national economy in particular, were better understood and appreciated back in the 1960s and the 1970s. Short-lived though it was, issuance, of the first historic insurance law, Proclamation 281/1970, which was made effective from January 1, 1971, was clearly a landmark. That proclamation created, among others, one, an insurance council of 7 members, top government officers, including ministers, whose main duties were to formulate general policy, to promote and regulate insurance business, formulate policies in respect of reinsurance, investment of insurance funds, and on other matters to attain sound insurance institutions. And 2, an office of the Controller of Insurance, responsible for implementing the proclamation and related regulations, as well as perform other supervisory functions over the insurance industry. Needless to say, we remember that one fateful day in December 1974, the Derg confiscated all financial institutions in the country, banks and insurance companies, with effect from 1st January 1975. And it was a year before that, forgive me, now that situation continued until February 1994, as I said earlier, when by proclamation number 86, 1994, the EBBDCA government permitted or allowed Ethiopians to establish insurance companies. And it was a year before that, when the said proclamation was still being drafted, that I seized the opportunity and offered my humble advice to the then governor of the National Bank, Excellency Ato Leykun Brahanu, to consider the various options or models of insurance supervision available, some of them close by, like Kenya, Egypt, etc., before making his final choice. He later told me that at the time he received my suggestions, the project study commenting that supervision of the financial sector, including insurance, be assigned to the National Bank of Ethiopia. He quickly assured me that he had read my letter and recognized the merits of certain of my recommendations, so much so that he would be prepared to, and this is the phrase he used, spin off insurance supervision to let it be handled by semi-autonomous authority, commission, or agency, preferably headed by a board in which the industry association and the profession would be represented. Now, that was 30 years ago. And plenty of water has run under the bridge since then. I wrote that letter and recommended an independent insurance supervisory authority as chief executive of the African Reinsurance Corporation, then residing in Lagos, Nigeria. Thanks to the few liberalizing steps taken since then, and the incremental progress made, the industry now boasts of 18 insurance companies, 849 branches, 7,543 employees, one national reinsurer, 2 representation offices of external reinsurers. The market, with total assets of 450 billion, paid up capital of over 9 billion. Impressive though these may sound, those figures are just too low compared to the country's potentials in terms of population, GDP, etc. Besides, in a market where price is almost the sole driver of competition, premium income ceases to serve as an effective measure of insurance penetration. Though not as an alternative, considering the extent of the values of the liabilities some insured, insurance companies may help us appreciate the value of insurance as a great enabler of commerce and industry. Now, there is no use in apportioning blame. is just one colossal systemic failure by all those who consider themselves professionals, under which classification I happen to fall. Those who are trusted with supervision, regulation, the education and training infrastructure or its absence, etc. All stakeholders in this unfortunate misadventure will have to share the blame. A combination of factors could be said to have brought about this situation. It's my view, and to just mention a few: lack of understanding and consequently appreciation by policymakers, as well as the general public, of the true value of insurance services as a mechanism for transferring and sharing of risks. Lack of understanding and consequently appreciation by policymakers, lack of any known established mechanism or forum for consultations between the supervisory authority and the industry or the profession, absence of any functioning domestic professional association or institution that could help train young professionals to serve the industry. The long-delayed 3P project, public-private project, to start a center of excellence, Ethiopian Institute for Financial Studies. Lack of initiative for the industry to go back to the drawing board and seriously address its failure to serve the needs of the vast majority of Ethiopians at the bottom of the pyramid, which needs very, very badly the service of the insurance industry, and particularly agriculture. Need to form a more strengthened professional association, starting from ourselves, a wonderful combination of professionals and investors, not to be confused with Association of Ethiopian Insurers, because that is an association of the insurance companies, not an association of the profession. My concluding remarks say that being an insurance man and having stayed for some 16 and a half years in Nigeria, I have been persuaded to believe that, it could have been worse. All right? So we should not complain about spilled milk. Let's see what we can do now, because I suggest we all share the blame and responsibility for where the insurance industry is today. I recall the opportunity given to me at a previous forum organized by iCapital that held at the United Nations Conference Center, where I made some suggestions and which I thought would help the insurance industry develop more robustly and meet the demands of the market. Permit me to recall some which remain valid. I'm almost there. Creating a still more friendly environment for what I wish to refer to as the true private sector. The truly competitive, entrepreneurial segment of the total economy, comprising all businesses and households, but excluding government or the public sector. Expedite initiative known to have been taken by the National Bank of Ethiopia, and I take my hat off here, to consider the long-awaited prayers of the industry requesting the supervision of the insurance industry be reassigned to a semi-autonomous or independent commission, authority, or agency led by a board that will include insurance professionals as its members. Insurance companies need to go back to the drawing board and seriously address their failure to address the needs of the vast majority of Ethiopians. They should not continue to feel comfortable serving only the top 1% of the population in this country. Insurance professionals to be encouraged to resuscitate their professional association, the Society of Insurance Professionals, because that is a truly professional association. Insurance companies, together with the banks, microfinance entities, professionals, Addis Ababa University, because they are keen to be involved in this. Other relevant educational, research, and training institutions to pool all necessary resources, material and others, to expedite the establishment of a true center of excellence, Ethiopian Institute for Financial Studies. Claim the facilities that had been purpose-built by public funds just outside Akaki. It was taken by the by Addis Ababa University and was given to University of South Africa. Now the National Bank has reclaimed it, has got it, and that should be given to the envisaged Center of Excellence. Allow me to thank again the organizers, iCapital, for the honor they have done me by affording me this high-profile forum to share my thoughts on a subject that is dear to me and my professional colleagues. My respect and gratitude also go to the distinguished audience of this forum for patiently listening to my address. Last but not least, I wish to thank the facilitators and all those who, in one way or another, contributed to the unquestioned success of this forum. And finally, I would like to thank and appreciate the President of the Association of Ethiopian Insurers, Ato Yared Mullah, whom I do not see here this morning, for calling me and asking me to give this presentation, just to recall what we have been asking for over 30 years now, and for giving me the honor to present this expose to this distinguished group. Thank you very much indeed.
Okay. All right, once again, can we give a very, very warm round of applause to an amazing gentleman that I've known for a number of years. He's actually energetic, very smart and witty, and very frank, right? I mean, if you've seen his speeches, if you've seen interviews he's done on television, he's always on point. And he's probably one of the very few people, if not the only one, who can make insurance sound sexy, okay? I mean, really, it's a the industry, I've known it when, growing up in the US, one of the first consulting projects I was assigned when I was at PwC was to go work on one of the biggest insurance companies in America. And I have to be honest with you, sitting with actuaries, when they talk about morbidity, mortality, and actuarial data and all that, you doze off, right? But when you have someone like Zafu Eyesuswork, you perk up, right? So, and I think that's what he's done. But just a couple points that I picked up, and I think he's been passionate about reforming the regulations for the insurance industry to have its own regulator, by the way. I think he's been advocating that for a number of years. I think they now have, I believe, a separate regulator, or it's in the process. So, you know, but he's also talked about connecting the insurance industry to, for example, the building of the GERD, right? He's essentially saying, if it wasn't for them, GERD would not be built, right? If it wasn't for the insurance industry. Again, he's trying to make it practical. He talked about only the 1% benefit. We've heard the 1% in a lot of places, especially in the US, you know, the 1% of the 1% are only the beneficiaries of the financial sector. I think he's re-emphasizing that we need to broaden that. He's recommending PPP, which I think, by the way, in Ethiopia right now, there's a lot of things being done in PPP, which I said, hallelujah. I think it's fantastic. What's in real estate and other things. So again, he's advocating that. But he's also talking about agriculture. It seems like, you know, maybe not many people understand the importance of having crop insurance and other things in the agriculture sector. So, but finally, he said we should be forward-looking. I think that was one of his key messages. Let's, you know, what bygone is bygone. Earlier in the hallway, he mentioned to me about when the DIRC came and they nationalized his shares in some insurance company that he had set up. I think what he's saying is let's forget that and move on. And I think it's a good message. But in general, as I said, he's fantastic. I first had a pleasure working with him when we were trying to establish the stock market in Ethiopia 20 years ago. I was fresh. I was new to Ethiopia. I was coming and going. I was in a committee of about 15 people. We're all energized. And he was one of those people who was actually encouraging us to go along. Now, of course, you know what happened 20 years ago. We went through the entire process of establishing what was called at that time the Addis Ababa Stock Exchange. We were arrogant. We never bothered to discuss it with the government. And I've told this story, and he's told this story. We just sent an invitation letter to the then Minister of Finance, inviting him to the inauguration. Okay, I mean, you can imagine the reaction we got. A few days later, he wrote us a polite letter saying, who gave you the right to establish a stock market? That was 20 years ago. So we learned our lesson. But you see now we're in a cooperative way, it's being launched. But Zafu Eyesuswork was at the forefront at the time. He's in insurance. He was on the board of the United Bank, right? Not only United in Insurance, Hibrat Bank, right? What was it called? Not anymore, but you used to be, right? Hibrat Bank, sorry. Hibrat used to be United, right? So I've seen him in multiple fronts, but that's why we gave him, you know, this really honorable slot to give a presentation to all of you. So let's thank him once more time before I move on to the next one, okay?